Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Lockheed Martin stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 112 billion market cap. They're trading at $4.67 a share, and they have 240 million shares outstanding. This week I'm going to do 5 videos on aerospace and defense companies. This is the first company. The second company is General Dynamics. The third company is TransDigm. The fourth company is Northrop Grumman. And the fifth company is L3Harris. Let's go back to Lockheed Martin. They're an aerospace and defense manufacturer. It was formed by the merger of Lockheed Corporation and Martin Marietta in 1995, almost 30 years ago. They are one of the largest companies in the aerospace, military support, security, and technologies industry. A big part of their revenue comes from the US military. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow was highest in 2021, 7.7 billion. Then it dropped to the low sixes, and it's been that level since 2022. And their margins are consistently 9%. That's their free cash flow margin, the percent of their revenue they convert to free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's pretty steady, around $6 to $7 billion a year. Margins a little better, 10%. Revenue is a sales for the company, and that doesn't look so great. It goes up a little bit from 67 billion to 69 billion. Their revenue per share is $2.90, and their share price is $4.67. They do pay a 2.7% dividend, which cost them $3 billion, about half their free cash flow. We estimated 4 years of future free cash flows. We also estimated a terminal value to all cash flows past year 4, that's 137 billion. We discounted those numbers back to today using a weighted average cost of capital. We get a value of the company of $124 billion. We divide that by 240 million shares. And we get a calculated stock price of $5.16. They're trading at $4.67, so they're trading at a 9% discount. It's a buy according to the model. There are 70 companies in the same industry as Lockheed Martin. If they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $1.8 billion in CapEx. That is better than the median average. The highest is RTX Raytheon, 2.4 billion. They are pretty leveraged. Their debt to equity ratio is 2.9. So that means for every dollar of equity, they have $2.90 of debt. They pay a nice dividend, 2.7%, the highest on this list. Lots of free cash flow, only second to RTX. They rank third in market cap. GE is the largest, then RTX, then them. Boeing is a little behind Lockheed. They have a really high price to book, 17, but a really good PE, much better than the median average. This should be blue. They have the best price to free cash flow out of all these companies. So that says a lot. That's the best stat. Price to sales is 1.6. That should also be blue, better than the median. They generate a lot of revenue, second to Boeing, but their 5-year annual revenue growth rate is worse than the median average. A lot worse than RTX, but better than GE. If you put $10,000 into this company 10 years ago, you'd be pretty happy at $38,000 today. That's a 14% annual return, a 280% total return. Let's take a look at their first quarter earnings slides. Look at their backlog, 159 billion. These are orders in the pipeline, future orders. That's a big number. They have some really advanced products on the horizon. Their F-35 TR-3 is on track. Here are some pictures of the F-35 jet. This is such an innovative product. If you search the term, what is so special about the F-35? It's supersonic, 1.6 Mach. That's 1,200 miles per hour. A plane goes around 400 miles an hour. Their sales in the first quarter alone is 17.2 billion. Remember earlier, their pipeline was 159 billion. So that could be a really big jump in future quarters. They need it. They've been pretty flat in revenue for a while. Operating margin 10.1%. We saw earlier their net income margin was 10%. EPS 6.39. 1.3 billion of free cash flow. They bought back 1 billion of stock, 800 million of dividends. On my Excel file earlier, I said 3 billion of dividends. That's for the year. This is only for the first quarter. Let's look at their 4 segments. The first is missiles and fire control. Revenue went up from $2.4 billion to $3 billion. Really big improvement in this part. Although their operating profit went down, it was 16%, now it's 10%. With higher revenue, lower profit. That's not what you want to see. Operating profit decreased 18% due to a classified program loss. Here's an article from last month. Lockheed projects potential $1 billion loss on classified program. That's $1 billion for their entire company. Their loss in missiles and fire control was about $100 million. And they talk about it right here. Lockheed took a $100 million loss on a classified program in its missiles and fire control unit and could rack up an additional $225 million in losses by the end of the year. And the company did mention they may incur $1 billion in potential losses. But the CEO says the program is long running and it will deliver strong returns in the future. So we may need to absorb some losses for a quarter or even a couple of years. Their second segment is rotary and mission systems. That went up from 3.5 to 4.1 billion. Operating profit went up from 350 million to 430 million. Margin improved from 10% to 10.5%. That's what you want to see. Sales increased 16% on higher volume. Operating profit increased 23%. Higher volume and favorable mix. Partially offset by lower net profit adjustments. Space went up from 3 to 3.3 billion. Operating profit 280 million to 325 million. Higher volume on FBM and hypersonics. FBM is Fleet Ballistic Missile. Also improvements in transport and tracking layer, as well as GPS-3. Operating profit up 16%. That's due to higher volume and ULA equity earnings. ULA stands for United Launch Alliance. Their sales for 2024 on the high end is 70 billion. Operating profit 7.3 billion. EPS of 26, operating cash flow 7.8 billion, capex around 1.8 billion, and free cash flow 6 to 6.3 billion. And most of that free cash flow will go to buying back stock, 4 billion. Here's a nice breakdown of their sales and operating profit for 2024, their estimate. Aero is their biggest, 28 billion. Second biggest is RMS. Missiles and fire control around 12 billion, space 12.5 billion. So sales around 69 billion this year, operating profit 7.2 billion. They had the best improvement by far in missiles and fire control, up 16% when you compare 1Q23 to 1Q24. Aero only went up 1%, so total revenue up 5%. Let's look at the company on Simply Wall Street. Its last price $470, 111 billion market cap, up less than 1% in the past week, up 3.5% in the past year. Let's see what they say about the company. Lockheed engages in the research, design, development, manufacture, integration, and sustainment of technology systems, products, and services worldwide. They operate through aeronautics, missiles and fire control, rotary and mission systems, and space segments. They mainly serve the U.S. government, also foreign military sales contracted through the U.S. government, founded in 1912, based in Bethesda, Maryland. Here's their stock price since 1990. It was $18. And then that same year, it fell to its lowest point, below 13. It did break through 50 in 1998, then fell below 20 again in 2000, ran up to over 100 in 2008, down to 58 in 2009, and then from 2009 to 2018, it grew a lot, up to about 350. Then it fell to about 250 in 2019. It broke through 400 for the first time in 2020. And then the COVID crash below 300. And it did break through 500 for the first time 1 year ago. Then 6 months later, in October 2023, it fell to 400, a drop of 20%. But it's done pretty well since the end of 2023, going from 400 to 470. But if you include the dividend, then you're up around 20%. Simply Wall Street's valuation is 646. They say they're 27% undervalued. 19 analysts priced this stock at 489. They say they're 4% undervalued. Their free cash flow forecast for 2024 is 70 billion. We saw that earlier on their first quarter slides. Next year, $72 billion, 2026, $75 billion. Free cash flow forecast for 2024, $6.2 billion, 2025, $6.2 billion, 2026, $6.4 billion. Their revenue back in 2013 was $46 billion. Then if you fast forward 2 years to 2016, down to $45 billion. But since 2016, they've been growing steadily each year, currently $69 billion. Their debt back in 2013 was $6 billion. It jumped to $15 billion in 2015. They lowered it to $11 billion in 2022. Now it's at its highest point ever, $19 billion in 2024. This blue line is their equity, and usually their equity is lower than their debt. At one point in 2017, it was negative equity. That means their liabilities are higher than their assets. Now their equity is $6.7 billion, a little more than 1/3 of their debt. And this green line is their cash. They have $2.8 billion of cash on their balance sheet. The reason their debt has gotten so high is through acquisitions. In 2022, they tried to acquire Aerojet Rocketdyne for $4.4 billion, but the FTC blocked them. The FTC doesn't like companies getting too powerful. And this company, Aerojet Rocketdyne, supplies advanced power, propulsion, and armament systems. Armament is military equipment and weapons. And these items are critical components for the missiles made by Lockheed. But unfortunately, the FTC said no. The CEO's salary went from $900,000 to $1.8 million. Total compensation, $23 million. Tenure as CEO, 4 years. Their CEO used to be a pilot in the U.S. Air Force. In the Gulf War in the early 90s, he actually flew Lockheed jets several times during the war. In the past year, there's been mostly insider selling, one buy. 3/4 of the company is owned by institutions, 15% by the general public, and 11% by their employees. State Street is the biggest shareholder at 15%. Their employee stock plan owns 11%, then Vanguard, BlackRock, and Schwab. Then you see Morgan Stanley, Wells, UBS, BNY Asset Management, RBC, and Goldman at the bottom. Their employee count peaked at 126,000 in 2015. Now it's 122,000. And the ticker trades on the New York Stock Exchange, Deutsche Börse, Xetra, Mexican Bolsa, Swiss, London Stock Exchange, Wiener Börse, Euro TLX, Bulgaria, the BATS Europe, Buenos Aires, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.